Alright, welcome back. In this video we will review the Virgin Wick theory trades of yesterday, Friday the 13th of February. Personally, I did not trade at all. I didn't see any A+ setups, and I was off for New York session. But nonetheless, we will go over the setups and I'll show you why I didn't see anything A+, even though there were some winners, and I know some people got some nice wins yesterday. Alright, let's start with NQ. So this is during New York session. So there was CPI released yesterday as well, which is this like massive spike you see here. But okay, so after that we had 9 a.m, so about to be New York Open. Bullish point of interest to work with, made by this bullish Chad candle closing through this Virgin Wick. So POI gets engaged, and we tap into some higher time frame FEGs. Now just waiting for our entry model, which is a SysD or an IFEG. Bang, there is your IFEG. So, how would I rank this setup? I like how we tapped into a bunch of FEGs. I don't like how far overextended we are. That's quite a significant drop. And I don't really love how far we have to market in from where the actual IFEG is and the swing low is. But you could enter in something like this. And then the next problem is we have to go through a bunch of bearish FEGs as resistance. So if I had to rank this, maybe like a B+, I'd say. I don't love it, but if I were to take it, I would enter there, and then around here I would have went break even, so I would have been stopped out break even. But I don't know, let's say maybe you waited a bit after the entry signal, maybe you got in there, and you could have got something like that. But yeah, nonetheless, I didn't take it. All right, what else we got? This is during London, 4 a.m. Yeah, I was watching this one. I saw we had bullish points of interest at 4 a.m. They got engaged along with some bullish FEGs. And we had a pretty decent V-shaped recovery, but just no entry model, no IFEG, no SysD. And that just ended up running. And then, yeah, so this one. This is the previous hour, so Friday 13th, 3 a.m. London session on NQ still. I was watching this one and I did not take it because, as you can see from my notes here, I ranked it a B+ because we were a bit overextended to the downside and the POI powers had already been used. Why do I say it's been used? Because, okay, so the start of the hour, we have this bullish point of interest to work with. It gets engaged within a few minutes and then we have a pretty significant bounce off it, as you can see. So the hour starts here at 3 and then bang, we go down. We just touch the POI and then we bounce off. And we take out all this drawn liquidity here. So for me, I consider that POI done. So that's one of the reasons I don't like it. And then we do end up engaging the POI again, but we overextend pretty far down to the downside. Ideally, you want to see something like, maybe like that far, and then straight back up. But the further we go down, the more unlikely it is that we will reverse. So for those reasons, even though we do get an IFEG entry model, I ranked it a B+. But I know some people took this one and they won, so good job if you did, if that fits your rules and if it's something you are happy that you took. Okay. Alright, this was another winner, which I was also watching. I was on the charts at this time. I was ready to enter, but did not like the conflicting FVGs. So let me show you what I mean. Okay, so here we are. This was during Asia session, 11 p.m. We have a bullish point of interest to work with thanks to this bearish shadow candle. Let's see, PY gets engaged and we tap into a bunch of red FVGs. Perfect. Bang, there is a IFVG, nice V-shaped aggressive reversal, exactly what you want to see. So you get into there, maybe stop just up there. But yeah, I don't love this because we are currently in the midst of a bunch of conflicting fair value gaps. So it's not the cleanest trade. A minus, if I had to give it a ranking, A minus. You almost get stopped out and then it runs to TP. But since we have so many conflicting gaps, you can just see how choppy it is. It's not a clean trade. But yeah, some people took it. Something I've been playing around with the idea of is risking normal amounts on A+ setups and then maybe just risking half amounts on A- setups. So if the setup is missing one criteria, like here for example, there's just a few conflicting FVGs, maybe consider just going in with half size. That was it for NQ. Let's have a look at gold. Okay. So this is during New York. We have some bullish PYs to work with. PY has not been engaged yet. PY gets engaged. Pretty strong V reversal, IFVG confirmed. So you could enter in there. But again, we are facing some resistance in the form of bearish fair value gaps. But it does go to TP, I believe. Yeah, there you go. But not A+, A- maybe. But that still wins. That's all right. Here are two losers for the exact same reason. Just a bunch of conflicting FVGs. So, we are at London, 4 a.m. on gold. We have a bullish point of interest to work with, but we are just amongst a bunch of red FVGs. Not what you want to see. And we get a confirmed IFVG right there. And you get stopped out in like 2 candles because we are in a sea of red. And then you get another IFVG right there. But again, we're facing a bunch of resistance, so I don't love this. And yeah, no good. You can probably go break even on this one though. It's not a full loss. Yeah. Yeah, that was it. Nothing for Asia on gold. So yeah, flat day for me. That's all right. I would rather keep my accounts alive than force bad setups. If you're not sure what bad setups are, I just made an A+ checklist video yesterday, so check that out if you haven't. Yeah, see you next time.